Welcome to The Explainer. Look, if you're wanting to take control of your financial future, but you absolutely do not want to lose your mind in the process, you are in the exact right place. Today, we're bringing some much-needed clarity to a topic that just confuses so many people, and we're going to give you the tools to finally feel empowered about your investing.
Let's be totally honest here. Feeling completely overwhelmed by thousands of different stocks and mutual funds? That's kind of the standard experience for most of us. You know the feeling, you log into a financial website and bam, you're immediately hit with this giant wall of numbers, flashing red and green arrows, and endless news cycles about which company is suddenly up or down. Trying to pick individual stocks or spending hours upon hours doing all this complex research, it literally just leads straight to analysis paralysis. Actually, scratch that. It causes so much anxiety that a lot of people just freeze and do nothing at all. But I've got some pretty great news for you today. You absolutely do not need to do any of that.
The ultimate relief to all that overwhelm is right here. It's called the three-fund portfolio. And guys, this is a shockingly simple investment strategy. It uses just 3 funds to cover the entire global stock and bond market. It's exactly what it sounds like. You only own 3 funds, but together they cover the whole shebang, the entire investment universe. It is hands down one of the easiest, most effective ways for beginners to jump in because it's incredibly low cost, highly diversified, and requires almost zero maintenance. Okay, let's dive into this. Here is our roadmap for today's explainer. Number 1, investing without the overwhelm. 2, the magic 3 funds. 3, your step-by-step guide. 4, why this strategy works. And 5, taking action today. Starting with part 1, investing without the overwhelm, ditching the stock-picking stress. Moving right along to part 2, the magic 3 funds, the only ingredients you need.
Think of this as your ultimate cheat sheet. We're anchoring these big abstract asset classes to very recognizable, simple ticker symbols, which, by the way, are just the letters you type in when you actually go to buy them. First up, you need a U.S. total stock market fund or an S&P 500 fund. Really popular choices for this are VTI or VOO. Second, you need an international stock fund to capture all those companies outside the U.S. And a great choice for that is VXUS. And third, you need a U.S. bond fund for stability, and a super popular ticker for that one is BND. And that's it. Those are your 3 ingredients. And you know, this perfectly illustrates the true power of this strategy. By purchasing just those 3 ticker symbols we just talked about, you're getting instant exposure to literally thousands of global stocks and bonds. You are instantly diversifying your money across the entire investment universe. You basically own a tiny slice of almost everything, everywhere, all at once. Which brings us to part 3, your step-by-step guide, the blueprint to building your portfolio. I really want you to see how highly achievable this 5-step checklist is. Step 1 is simply opening a brokerage account. There are excellent low-cost options out there like Vanguard, Fidelity, or Schwab. Step 2, you just choose those 3 funds we just went over. Step 3 is deciding your allocation, which really just means figuring out how much of your money goes into each of those 3 buckets. Step 4 is where the real magic happens, guys. You automate your monthly contributions. Even putting away just $100 or $200 a month on autopilot is a fantastic start. And finally, step 5, which honestly is totally optional for beginners, is just to rebalance it once a year to keep your percentages on track. Now, what's really interesting here is making this whole concept of allocation instantly intuitive. Let's look at a concrete example for a 30-year-old. See, your allocation is based entirely on your age and your personal risk tolerance. Since a 30-year-old has decades before retirement, they can absolutely afford to take a bit more risk for higher growth. So their setup looks like this. 70% goes right into U.S. stocks, like VTI. 20% goes into international stocks like VXUS, and just a small slice, 10%, goes into bonds like BND just to give a little bit of stability. Then, as you get older and closer to retirement, you'd slowly make that bond slice bigger and the stock slices smaller. Pretty simple, right? All right, part 4, why this strategy works, the proof behind the simplicity. So the absolute crucial point here is, why do so many really smart investors absolutely love the 3-fund portfolio? Well, first off, it is extremely simple to manage. Second, the fees are incredibly low. Third, you get this massive, broad diversification across thousands of companies and bonds, which totally protects you if one single company happens to fail. Fourth, it boasts historically strong long-term returns. And finally, it requires almost no maintenance. It is a lazy but highly effective passive investing style. You can literally set this whole thing up in one single afternoon and then only check it once or twice a year.
Let's circle back to those low fees I just mentioned, because this number is vital, 0.05%. At good brokerages, the expense ratios, which is really just the fee you pay the fund manager to run the thing, are often under 0.05%. Think about it. If you were paying a traditional financial advisor or buying actively managed mutual funds, you could be paying fees of 1% or even 2% every single year. This incredibly tiny 0.05% shows just how much of your hard-earned money stays directly in your own pocket to grow, rather than being handed over in Wall Street fees.
And finally, part 5. Taking action today, your next steps.
So, we've learned exactly how simple and powerful this is, and now I'm issuing a direct challenge to you. This week, I want you to open or log into a brokerage account. Just look up those 3 funds we discussed. Even if you only start with 50 or $100, you are already putting yourself leagues ahead of most people. And hey, if you feel any lingering hesitation, I really want you to let this powerful quote sink in. The best time to start investing was years ago. The second best time is today. Don't beat yourself up if you feel like you're getting a late start. The absolute most important thing you can do for yourself is just take that first step today.
So knowing how easy, how low cost, and how incredibly diversified this strategy is, would you rather start with a 3-fund portfolio or something else? Really think about it. You've got the blueprint, you've got the knowledge, and honestly, you've got this. Thanks so much for joining me on this explainer, and I absolutely cannot wait to see you take control of your financial future.